Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Hello and welcome back to another episode of Private Equity Profits Podcast. With me today is Joel Eisenberg. Joel is the founder and chairman and chief investment officer of Joel Eisenberg and Company. It's one of the top 100 wealth management firms in the country. Joel has often been quoted in numerous financial publications and has appeared regularly on radio and television. He's been frequently selected as one of the top financial advisors in America by numerous publications, including Barron's, Forbes, Worth, and the Financial Times. He's been named for the 7 consecutive years one of the top financial advisors in the medical profession. As a teacher, well as a practitioner, Joel has conducted financial planning seminars for the management groups of leading Fortune 500 firms, speaks regularly before numerous professional trade organizations, and he has taught financial tax planning at New York University, the New School in New York City, and Iona College in New Rochelle in New York. Joel, thanks so much for being here today. I'm excited to have you on.
Thank you for having me, Cliff. Good morning.
Good morning. Tell me about your background and how you got started. What led you to the financial services?
So my background was working for an accounting firm out of college, and I happened to transfer out to San Francisco in 1983. So you can get a sense of my age, and I'm on the back 9. And while I was working for a big 8 accounting firm at the time, I found at that time the only MBA program in the country in financial planning. And at that time you could take the CFP. Pretty much it was like just an online, I don't even know if it was online, but you could just, take it. I think it was, you didn't even have to take courses. You could just take an exam. And I felt the education would be worthwhile. So I quit the job, got my MBA full time, moved back to New York to start in the financial planning career back in 1984. I turned down a lot of offers from accounting firms because I didn't think they'd really get into the field. And I took a 50% salary cut to work for someone who I thought would a good mentor and give me some guidance into the field, which was still in its infancy back then.
It's interesting. At the time, you started Joel Eisenberg and Company, a fee fiduciary advisory firm. It was a revolutionary concept. What were you seeing that made you start the company around that premise?
So having come from the kind of the accounting world, and back then, and again, after accounting firms made me offers, I got a lot of offers from, mutual fund companies that was sold door to door back then, and some brokerage firms and different things. But I never felt like those places were putting the client first. So to me, I got a chance to start a practice as an accounting firm. When I moved back to New York, I was 26 or 27. And I think that accounting firm kind of gave me that world where it was always client first. The fee only was attractive. And I thought it was one of those areas that it was a very strong differentiation from other planners there. Most people weren't doing planning at that standpoint. The RIA industry was really in its infancy, in a big way, and nothing like it is now. There weren't that many places to do it. And actually, the accounting firm that I joined in 1985 was the first accounting firm in the country to register as an investment advisor.
Very progressive. Yeah. You can see your leadership has really opened up a fiduciary responsibility to the client. In other words, you were a leader in that field at that point. It's a lot to be proud of.
Thank you. And I think it was, it's an interesting, as you see, the field has matured and grown. Mm-hmm. It's not as easy to differentiate yourself. So back then, the teaching was great. It gave me great context, but a chance to, right away at an early age to start teaching people the CFP. Mm-hmm. I had like the head of benefits from IBM in my class. So I also made these amazing contacts that came in there, and some of my my best clients over the last 40 years, kind of came out of that class, which without even soliciting. But I think it really, it resonated with clients, just the idea back then of that fee only kind of a thing. Now it's used by everyone. Financial planning is a catchword. It's used by everyone. And even in the RIA business, I think there's a lot of it where people became asset gatherers, less worried about the planning and doing the hard, heavy lifting that comes along the way. And I think that client first thing is the most important there. The money will always follow afterwards, but if you take good care of clients and they understand it, you're putting them first, that leads to a lot of business. It may take slower to build, but great way to build a practice that'll be last for a long time.
I call it innovation. What kind of challenges did you face when starting the company at the time? Was it considered to be a radical new business model? How did you overcome those challenges?
Well, to a certain extent, I had the ability to kind of practice while I was in an accounting firm. So I started the practices there when I was 26. Go to an accounting firm back then, all the partners would promise you all this business and different things. And I figured out after like a month or two, like if I was going to rely on these guys, I wouldn't be eating much. So, that's when I started teaching. That's when I started going out, joined the FPA. I became president of the FPA in New York and different things and made great contacts. And that's, I learned that I had to go out and bring in the business. And I think that's an important part of the field also is at the end of the day, you can be a service guy, you could be a business guy. So the most important thing to me was, both. I don't feel like I'm a salesman, but I think I can sell because I love what I do. And I love working with our clients and different things. But the big challenge back then was people really didn't know what it was. And people were paying ridiculous commissions and buying, all these load funds and tons of insurance and different things. So it was its infancy. It was a new field. And it was really like when people would hear about it, they were like, wow, but just people didn't really know what was going on there. But the nice thing also was it was an easy entry point because we didn't really have any competition. When we started, it wasn't really anyone else out there. I think probably late 80s, some of the accounting firms and ACO started, getting pretty big and different things. But there wasn't much in the world of fee-only financial planning back in the 80s.
Tell me a little about your investment process. What are the things that you do that separate you from the other financial advisors?
I wouldn't say that anyone comes to us and just says, here's $1 million or $2 million, manage it for me. For us, it's really the planning first. So our investment process is really driven off of each individual. We have an investment committee that reviews products and has, approved lists and different things. We won't really touch someone's investments until we've done, a month or two of legwork of really understanding their cash flow, their estate planning, who they are as a family and different things. And then we tailor all the investments that we like to that individual family and get a good sense of it. And it takes time, again, it's just that idea of someone coming in, throwing money at you and just investing in a day just doesn't work for us. It's really that part of, tailoring the portfolio for each individual. And sometimes there's a trial and error of really getting to, a sense of who people are. This has been a relatively easy year to deal with clients. 2020 obviously was not an easy year because we had to get them through, the losses that happened in February, March, and April of 2020 and, get them so they wouldn't do the sales and to, hold on. And that's what we really try and do with all our clients is to try and make sure that we never get into forced sales. A lot of times it's looking and saying is, we may, and we have different philosophy there. So we may be more aggressive with retirement account money, IRAs when someone's 50, because they don't have to touch it till they're 70. And then they, 72 nowadays, and then they last for 30 years. So we look at that long-term money and then we manage it to a way where we say, okay, they're getting close to 72. Let's build up a few years worth of distributions in cash and bonds. And, good year like this, we'll sell from the stock side. It's a bad year, we'll sell from the bond side. So we try and get in position with clients where we never have forced liquidations and, any situation where we have long-term money that we can let it go through different cycles, even an extended downturn. Since the financial crisis, the markets have been on fire and an unbelievable amount of wealth created for clients and for, tons of individuals around.
Are you getting any pressure at this point with the upcoming tax increase on capital gains or?
Well, I wouldn't say pressure, but we're obviously people are all, interested in what to do, in light of these proposed changes. On the capital gains side, it's one of those things you hear about it. There's certain things to do. There's certain tax increases. We're doing a lot of option exercising this year to bring ordinary income in. capital gains, I don't like accelerating capital gains. Again, for me, part of what we do is also positioning things, like we try and put the more tax efficient things in the personal accounts, the more tax inefficient things in the retirement accounts. So, my goal with capital gains is, if I'm buying index funds and ETFs, is never to sell them. And so, the rates will go up next year, maybe, then they'll go down in another 4 years, they're up. So again, we manage as best we can as far as doing tax swaps. We haven't had a lot of losses, to take losses, but, with appreciated security, there's a lot we're doing with charitable situations and, very aggressive at the using appreciated securities for donor advised funds and all the gifting, and also with their retirement accounts using qualified charitable distributions for them.
Very, very positive. What does a perfect portfolio look like to you?
Well, first of all, I don't think there is any perfect portfolio. I think part of this is, to me, the part is, we try and build a portfolio that says, how do we get a client to get through the tough times? Quite honestly, you look at it and you say, in the good years since the '08 financial crisis and the rebound in '09, you look back and say, how much value do you really add? And I think from what we do as gatekeepers and client advisors, we're more valuable in the tough markets. So in the good markets, it's easy. So I don't think there's a perfect portfolio, but it is really the part that says, what's with this individual client where I can get them through the tough times. So it's, how much cash do I really need? Look, at the end of the day, cash is dead money, and the bonds are pretty much dead money nowadays. You want to go into, for the growth assets, the hedge funds, the private equity, and different things. And you keep enough in cash and bonds to get through. And then, and it's also changed, the old rules, when someone turns 70, you used to have it where it's all bond portfolio. That doesn't happen anymore. So there is no perfect portfolio. And for us, it's really, what can we build up so that this client can do well in good times and get through the bad times without a lot of damage or any panic selling? And that's the big thing, is make sure that people just not selling at the wrong time.
I think that's the education you bring forth, and understanding what the client's needs are, what their vision of success looks like, and you work it backwards. Do you sit down and talk with the wife and the husband, looking at the risk they both feel comfortable with?
Yes. And it's not an insignificant amount of our job is to try and figure out what the two of them are saying to each other and what they really want to do and how to compromise. Because sometimes, again, whether it's the wife or the husband, or two wives or two husbands, the issue is how you balance out the different risk temperaments that they'd be both comfortable with along the way. And that's always, listen, it's important to have all the parties that are involved there sign on.
So actually, your firm is actually reducing divorce. Think about that.
I know, we've had a fair amount of divorces. When we do have those, also we try and keep things calm and mediate and, try and make it as less painful as possible. It's a very tough process.
It's hard. Your website says that your firm acts as a traffic light for your clients' key financial decisions. What are some of those directions that your traffic light is giving?
So each client, there's all different things that are there. So we get anything from, the whole, do I need life insurance, to can I afford this house, to, leasing cars, buying cars, gifting. And part of it is, along the way is, there's always things that are meant to be done. Everyone's pushing, with year-end tax planning this year, or these state things, they do it. And sometimes it's, you got to look and say, listen, it's, if you do more gifting, there's no benefit to you. It only helps your kids, and it could cause problems. There's, you guys get divorced, or there's, one spouse may not have access to money, or do you really want your kids getting this money at a certain age, type of thing. So, there's critical decisions. And that, I think that's the part that's in there is, we act as kind of co-CEO with the 2 or 3 clients, the family. Excellent. And it's a group effort that's there. So, there's no right or wrong answer. Here's the upside, here's the downside. This is why we think it makes sense. These are, the risk that you have to deal with. Let people make that educated decision that they want someone that they feel is on their side. And that's always the thing that's, the most rewarding for us, is to feel like that, like we're part of the family.
Very important. A big part of your company's success lies in the analytical capabilities. What are some of the basic analytics that you and your team are always looking at, and what are they telling you? Are you using or looking at incorporating machine learning, artificial intelligence to assist your dedicated team?
So there's a part which is, over time, we've seen people planning programs that come out. Some of them had artificial intelligence more and more. They're getting better. But I think people used to look at the software to do the planning. And I feel like, there's a human element to it where that I think is the differentiator. Like we use software, we'll run projections for, this scenario, that scenario, and we analyze them, but the software doesn't tell us what to do. We review them and go and use our experience to come up with how these things will work for that particular client. And again, it's like one of those things, anytime you run out of projection more than a year or two, it's generally, garbage in, garbage out and type of thing, but you keep updating it and you keep seeing where you're going from a standpoint that's there.
You got a lot of experience. That experience is back testing. You learn from history. A big part of your business is tax strategy. What are you seeing as the best moves to make regarding one's tax preparedness and strategy?
This time of year, people just, especially high net worth people just finishing off their returns. Some have extension because of the hurricane, but, the tax return's a good thing to look at from a standpoint here. What I think people are looking at first is there's a possibility of rates going up next year under the proposed plan from Biden. So the question is, if they have income, do they, they accelerating it this year where they know the top rate's 37% versus next year could be as high as 43 or 44 for high earners. So we've been doing a lot of option exercises, bring the ordinary income here. We'd start to do a fair amount of Roth conversions. Okay. Some of that may get taken away. What you're really seeing in the big areas, they're talking about bringing for high net worth, they're talking about bringing the credits down from, just under $12 million each person to half of that. At one point they were talking bring it 3.5. So you're seeing for high net worth, all the lawyers are doing these spousal lifetime access trusts or people just using up the rest of their $11.7 million credits to do the gifting there. So again, year end is, minimum distributions, make sure you get withholdings, from the IRAs. We're doing a lot of charitable giving, a lot of donor advised funds where effectively it's a private foundation, but you don't have the administrative and tax headaches. Appreciated Securities had an amazing run up in the market. You got your Apple stock, Microsoft, all those big tech names. It's not a bad time to put it in. Remember also, if you like the stock, you could put it into the donor advised fund and then buy back the stock with cash and you get a stepped up tax basis that way.
I could see the brilliance the team brings forward to the clients. What does your typical or ideal client look like? Who are you serving?
Maybe a prettier version of Jeff Bezos. No,
okay.
No,
well, we have listeners of that caliber.
For us, our, is I would say, in the $5 to $500 million range is our client base. But, for us, it's really the part of our ideal client is someone who wants kind of that, financial concierge, financial quarterback. Okay. I know that's a trademark name, but, the concept of it is that they want someone to help do it. And it's not that we have all the answers in the investment world, but we're good as the gatekeepers to look and say, we'll work with the other advisors. We'll make sure everything is all coming together. So it's really having that one person where you're the only one paying them and they're helping oversee, the whole parts with the tax knowledge, the estate planning, the investments, the insurance and different aspects of it, because it's a pretty complicated world out there and it's getting more and more complicated.
So you have a financial 360 on that client at that point.
Yeah. Really go through the goods and the bad through life, all the good events in life and all the tough ones.
So they're friends. Okay.
Yeah.
I focus on private equity and real estate funds. What are some of the general trends you see shaping this sector of the industry?
Well, I think for firms like us, listen, private equity's obviously done amazing, has had a good run up. What you see is, again, kind of the best of breeds. A lot for high net worth, it's sometimes tough to get into those funds, and then it's, it's the big commitments that are there and the different things. So we're seeing more. From our standpoint, we're seeing more in the secondary market where it's a shorter J curve, where it's also a situation where they're buying into the biggest deals, but they're able to get them on a secondary with a discount. And the real estate one is the fascinating one to me, is just how the whole pandemic is going to change out with the real estate world. And, again, both of us being around the New York area just to see what happens to the office market and the repercussions that'll have. We've obviously in the past had so much going on with retail. You see that everywhere in the mall space and different things. So the whole, rejiggering of real estate with, I think every company's looking at their leases when they come due and saying, we're probably not going to need as much space. if we're going to do hybrid type of things. Whenever there's uncertainty, there's always opportunity, and there's a lot of smart players in the real estate world. But, just from an observation standpoint, it'd be kind of fascinating to see how this all plays out and how the market redistributes everything.
I agree with you. New York was in a state of flux at that point in time. The streets were empty. Things are coming back nicely.
It is, but it's probably the best business opportunity to open up service industries. The stores, there's been so many closures in restaurants, and it'll be another renaissance type of thing, but it'll still be fascinating to watch it all play out there.
We're going to have a change of a mayor in New York City. Maybe that'll improve the dynamics and the ecosystems in the city.
People are waiting for that. Yes.
Yeah. How does the very and ultra high net worth individuals prepare for a business estate succession in regards to preparing the next generation for the responsibilities and empowering them to make good decisions?
So the whole estate succession. So, with business, again, you have children that are involved with the business, and you could have children that are not involved with the business. So it's about equitable versus equity, right? So again, it's not always an easy one, but again, it's, I think, teaching the right values, and it's, I think this is an interest in general. What we're seeing is, the amount of money that's going to be passed down in this baby boomer wave is unprecedented. And I think a lot of these people, either were second generation or first generation college, and they all know about the Depression and World War II, and the 50s and the 60s, and what their parents did to struggle to make it work. And I think a lot of their children have grown up more affluent, so it's teaching the right values as far as the work ethics. And then you got to deal with, do you pass on the stock? Do they buy the stock? Do they deserve it? All the different things. So having a team of attorneys and accountants that are involved with there are very valuable. And, and again, look, there's a part which is, the best people generally come in and they work in the mailroom, and then they work, in the warehouse, and then they work their way up there. And so, it's also teaching the children all the phases of the business that are there. But that's, and a lot of those businesses don't succeed in the second or third generation that are there. So it's being prepared for that, because some people say, their children are not prepared for this. And then instead of, passing on to them, they take care of the succession by doing a sale while they're still alive, and probably better value than if they were gone.
Yeah, M&A has been an amazing year at this point. I've had some other guests on, and they just can't digest the volume of businesses that are looking to sell. And they're trying to do it by the end of this year.
Yeah, look, I think the pandemic's made everyone evaluate their lives and what they're doing and stuff.
Which is fine. I mean, that's what life is. It's a journey.
Yes.
What will be your personal legacy, and what are you most proud of?
Well, I mean, I think I'm most proud of having built a nice firm, with great people that, I'm at the stage now where, they co-work with me on all the clients, so I'm still involved with the clients, but I see how valuable they are, and to watch the next generation starting to take over more and more control of those accounts. That feels like it, and to see the success I have. Last February, I gave up my CEO title, and I appointed someone who'd been working with us for 20 years as the CEO, and I think that's really the rewarding part there. And I think for us, it's that special relationship in the clients where someone passed away, I get the first phone call. It's not the fun one, but it is that part of being there, and getting people through those tough times. That's the most important. Celebrating is obviously the easier part, but, making sure you can get through people to the tough time is how you keep clients for life.
Is there anything I haven't touched on that you'd like to share?
No, I think you do a great job, Cliff, and I think you really you had good questions, and I think we had a good conversation on this.
I want to thank you so much for being here, Joel. Your business model shows there are other ways to be served when planning your financial future that differ from the traditional model. It was great to have you on. I'll share your company's web address, which is joelisaacson.com, which is spelled JoelIsaacson.com. Again, that's JoelIsaacson.com. Joel, would you like to share your contact information with our listeners?
Sure. You could just Joel@JoelIsaacson.com if anyone has any questions. And thank you for having me, Cliff, and thank you to your listeners for listening.
I want to thank my listeners also. I'll look forward to being back with you shortly for another episode of the Private Equities Profits Podcast. The show has been produced by Market Domination, LLC.